Everywhere you look, the numbers rise. Governments, companies, families, all sinking deeper into red ink. The global debt has surpassed $300 trillion, more than 3 times the value of everything humanity produces in a year. And yet, the question remains, if everyone is in debt, who is the creditor? It feels like a paradox, a mystery hiding beneath the world's ledgers, as if somewhere a secret empire were quietly collecting interest on civilization itself. But the truth is stranger and simpler. There is no hidden vault, no cosmic banker in the shadows. There is only us, trading promises with one another. Each loan, each bond, each mortgage is a thread in a vast web of trust. When one country borrows, another invests. When a citizen saves, the government owes. Every debtor is mirrored by a lender, and the system balances on belief. Debt is not a monster devouring nations. It is a living organism feeding on confidence. The world owes itself money, and that circular faith keeps civilization moving. Until, one day, it falters. Next, we'll travel back to where it all began, to the first empires that learned to turn debt into power. Because history's greatest fortunes weren't earned, they were borrowed. To understand why the world runs on debt, we must return to the moment rulers discovered a dangerous idea. You can buy power today, with tomorrow's money. Long before modern Wall Street, there were city-states. Venice, Genoa, Florence, small on the map, colossal on the ledger. They faced a problem. Wars, fleets, fortresses, all too expensive for their treasuries, too urgent to wait for taxes. So, they invented a new weapon. Instead of begging a single rich family, they issued public bonds, slices of state debt sold to merchants and citizens. In return, the Republic promised steady interest, backed by future taxes and trade. These promises could be traded, inherited, used as collateral. Paper claims on tomorrow's revenues became today's wealth. For the first time, ordinary citizens didn't just obey the state, they owned a piece of it. When the government owed you money, you suddenly had a reason to pray for its survival. This model spread. The Dutch Republic, then England, turned permanent debt into permanent strength. A reliable market for bonds meant cheaper war, bigger fleets, global reach. Debt stopped being a shameful burden. It became the infrastructure of empire. The message was subtle, but revolutionary. We may never fully repay you, but as long as you trust us, your paper is as good as gold. In Chapter 3, we zoom out to the present, to map this inheritance. A world where every state, bank, pension fund, and saver is locked inside the same web first spun by those maritime republics. A web so dense, it's no longer clear who truly owns whom. What began in a handful of maritime republics has now become the operating system of the entire planet. Today, when we ask, who holds the world's debt, we step into a maze of crossed promises. Nations owe money in their own currency. Companies owe banks. Banks owe each other. And all of them owe you through your savings, your pension, your insurance. First distinction, public debt, issued by governments. Private debt, issued by households and firms. Second distinction, domestic debt, held by residents. External debt, held by foreigners. The illusion of a single monstrous global debtor disappears. What we see instead is a dense web. Japanese pensions holding European bonds, European banks holding American treasuries, emerging markets borrowing in dollars from funds in London or New York. Each red number on one balance sheet is a black number on another. This is why the total seems impossible. The world cannot repay everything at once, without destroying the very assets that define its wealth. So the system doesn't seek purity. It seeks circulation. As long as payments flow, rollovers succeed, and investors believe in tomorrow, the maze holds. But inside this architecture, power is not evenly shared. Some currencies become anchors. Some bonds are treated as sacred, others as fragile. And in that hierarchy of trust, empires are quietly chosen. In Chapter 4, we descend from abstraction to the core of that hierarchy, the debt of the United States. Who really holds it, and what that answer reveals about who commands this age of infinite IOUs. Every empire leaves behind a signature. Rome had its roads, Britain its navy, the United States its bonds. The U.S. Treasury market is the backbone of the modern financial order, a mirror where the world sees safety, and a ledger where trust becomes profit. But the mystery endures. Who, exactly, owns America's debt? Contrary to myth, it's not foreign powers pulling invisible strings. Yes, countries like Japan and China hold vast reserves of U.S. bonds, but together they account for less than a third of the total. The real creditors are domestic. American banks, pension funds, insurance companies, and above all, the Federal Reserve. When the Fed buys Treasury bonds, it's not paying off the debt. It's transforming it, turning long-term promises into liquid money, the same way an alchemist turns metal into gold. And the circle closes. The U.S. government owes dollars to institutions that are funded in dollars, regulated in dollars, and backed by the same government. It's a loop, elegant, powerful, and fragile. This self-financing empire functions because the world believes in the dollar, believes that the paper they hold, those crisp bonds, those digital entries, will always be honored. So long as that faith survives, America's debt is not a weakness. It is its most potent weapon. But what happens when the cost of belief grows too heavy? When paying interest demands new debt, and rolling over the past becomes the only path forward? In Chapter 5, we confront that paradox. A system designed never to end. A world that must keep borrowing to stay alive. Here is the secret no one prints on the front page. Modern sovereign debt is not designed to be repaid. It is designed to be rolled endlessly. When a bond matures, the state rarely gathers cash to settle it. It issues new bonds to pay the old ones. Old promises buried under new promises. A controlled avalanche of IOUs stretching into the future. Politicians speak of reducing the deficit, as if one heroic budget could cleanse the books. But the true objective is simpler, colder. Keep the machine running. As long as the economy grows faster than the cost of interest, investors trust the currency, and markets accept the rollover, the system holds. Chasing zero debt would do the opposite. It would drain liquidity, crush savings, and erase the very assets held by pensions, banks, insurers, by citizens. The absence of public debt would not be a utopia. It would be a vacuum. So states choose another path, perpetual motion. They refinance, restructure, extend. Debt becomes a permanent fixture, like roads, armies, courts. Not a storm, but a climate. The real risk is not magnitude alone, but the moment when belief fractures, when investors demand higher yields, when rollovers stagger, when the infinite staircase of promises suddenly looks finite. In Chapter 6, we meet the quiet architects who make this illusion workable, the central banks. Institutions that can create money, absorb debt, and postpone the reckoning for a price. The infinite staircase of debt would collapse under its own weight. Without one quiet actor holding the structure together, the central bank, not a commercial bank chasing profit, not a politician chasing votes, an institution with a power almost mythic. It can create the very money in which the debt is denominated. Here is how the trick works. When a government issues bonds, markets buy them with existing money. But when the system strains, crisis, recession, panic, the central bank steps in. It creates new reserves with a keystroke and uses them to buy those bonds. The debt does not disappear. It moves from the hands of investors to the balance sheet of the central bank. In exchange, the system receives liquidity. Interest rates fall, and the illusion of safety returns. Call it quantitative easing, asset purchases, providing liquidity. In essence, it is this: transforming state IOUs into cash-like instruments to keep the machine turning. The state issues promises. The central bank validates them with newly minted money. And everyone down the chain, banks, funds, citizens, continues to behave as if the future is under control. But power never comes free. The more debt central banks absorb, the more markets depend on them. Prices lose meaning without their support. Risk is no longer fully priced by investors, but by a committee in a closed room. The line between independent guardian and silent co-conspirator of fiscal excess grows dangerously thin. And so we return to our first question. If everyone is in debt, and money itself is born from this cycle of promises, then who is the true creditor? In Chapter 7, we strip away the myths and reveal the uncomfortable answer. The system's final lender is not a king, a fund, or a foreign empire. It is us. We began with a riddle. If every country is in debt, who is the creditor? We have crossed empires, markets, central banks. We have watched promises multiply, roll, and migrate from parchment to screens, from merchants to funds, from treasuries to the balance sheets of silent institutions. Now we arrive at the uncomfortable answer. Behind every government bond stands a pension fund. Behind every pension fund, a teacher, a nurse, a factory worker. Behind every insurance reserve, a family hoping nothing catastrophic happens. Behind every mutual fund and savings product sit millions of small, invisible creditors who may never read a prospectus, but depend on its yield to survive old age. The supposed monster of public debt is built out of their expectations. Out of our expectations. When a state cuts its debt brutally, it is not punishing a distant villain. It is eroding the assets of its own citizens. When inflation quietly eats the value of bonds, it is not only disciplining speculators, it is diluting the savings of workers who never chose the game, but were folded into it. We are at once debtors and creditors. We finance the system that burdens us. We demand safety from the very architecture that makes us fragile. So who is the creditor of the world? It is the network, the crowd, the saver who thinks they stand outside the storm, when in truth, their shelter is the storm. This is the final twist. The power of modern empires does not rest on gold, oil, or armies alone, but on billions of people willing to hold their promises. In the end, money through empires is not just history. It is a mirror. To understand who rules this age of infinite IOUs, look past flags and headlines. Look at where your savings sleep at night. Because, whether you know it or not, you are part of the empire's balance sheet. We've followed a single question across centuries of trade routes, war loans, central banks, and silent savings accounts. From Venetian bonds to Dutch fleets, from British consuls to US treasuries, from handwritten ledgers to invisible numbers pulsing through global fiber optic cables. The pattern is clear. Every empire discovered the same formula. Turn future tribute into present power. Wrap that promise in law, ritual, and reputation. Convince merchants, citizens, and rivals to hold your debt as their safest asset. When they succeed, their bonds fund armies, roads, ports, algorithms. Their currency becomes the language of trade. Their crises become everyone's crises. When they fail, trust evaporates, creditors flee, and what once felt eternal collapses in a single generation. So what do we do with this? First, stop treating debt as a cartoon villain. Understand who holds it, who benefits, who absorbs the risk. Second, follow the incentives. Where the world parks its savings, it also surrenders part of its sovereignty. Third, remember the quiet hinge of history: confidence. Not in slogans, but in institutions, contracts, and the capacity to adapt. Money through empires exists for this reason: to show that behind every empire's glory and ruin stood a balance sheet. If you can read those ledgers, ancient or modern, you no longer see headlines. You see strategies. You see pressure points. You see the next empire forming long before its flag is raised. The world is not just in debt. The world is its debts, a living map of who trusts whom and for how long. Learn to read that map, and you stop being a spectator. You become one of the few who truly understand how power is funded. Welcome to Money Through Empires. This is only the beginning.